In this long 10 years journey as a trader, there are a lot of things that I had to learn, and there are a lot of secrets that I had to discover to find success in trading. Among all of them, there is only one secret that changes my trading completely from top to bottom. We talk a lot about this secret, but today I'm going to show that one thing that will change your trading as well completely if you look at deeply into the chart. Now, when we look at the chart in the trading, we see indicators, candlestick patterns, a lot of things, but we don't see one thing, and that one thing is liquidity, which is the unseen part of the chart. But if you understand when the liquidity is being grabbed, you can understand when the smart money coming in the market. And that is what exactly I will be discussing in this video today, from A to Z, how to identify and, more importantly, how to trade liquidity so that you can trade with the smart money. Now, if this is something you are interested in, make sure that you give a thumbs up and also subscribe to the channel if you haven't done yet. So without further delay, let's get started. So before you go to the real chart and looking at the real trades, first let's look at this theory behind the liquidity so that you know exactly why it is important to know the liquidity and how you can take the full advantage of liquidity grab. So first of all, let's imagine that there is a market, there is a resistance here. So in the past, whenever the price reached that level, has got a rejection. Again, the price reached the same level, has got rejection. So as the market is moved by the belief, as in the past there has been rejection multiple times, the market is getting a rejection from the same level. The traders like me also will be interested to sell from this level, because what happened in the past is likely to happen in the future. Therefore, the biggest trap here is that when the traders start to believe that the market will drop from this level, they place a sell and stop loss above this high just to see that the market in fact has dropped in the direction, just has gone up a little bit further to the upside to the stop loss, hit that stop loss, and then rejected from that level to the complete support level to the liquidity zone. And once the market grabbed that stop loss, that liquidity, the market drops way more than it should be. Why? There is only one reason, is because when the stop loss hit, all the sellers who sold this market, their stop loss is a buy order. As a trader, we think that I have sold, so I'm only a seller. But as a matter of fact, when you are a seller, your stop loss is a buy order. And as a result, when you place a buy order, all the stop loss is hit. Therefore, big boys started to sell. And that's where the market takes its biggest move, because when involuntary stop loss hit, the market moves with a bigger momentum, and that's where the smart traders get in the market with the smart money to trade the market after this liquidity grab. This is the simplest way to understand liquidity and trade it based on that. What else? The next thing is patience. When you have patience, you can wait for that to happen, because here most trader who will be stopped out, they will stopped out because of impatience. So this is also a very important part of trading with the liquidity. Now you understand the theory. Let's look at now real chart, going to the example to see how to understand and find those liquidity candles so that you can trade in the major direction of the trend with the smart money. Let's jump onto the chart. Okay, today. So let's see this example on gold on 30 minutes time frame. So if you look at gold on the 30 minutes, what we can see that there are three important candlestick pattern formation in that area. Now, when we look at the liquidity, the most important part that you look at also the direction of the trend that usually we can look at from the market structure, as well as 20 EMA, which is the blue, and as well as the 10 EMA. So as a rule of thumb, when 20 EMA is below, 10 EMA is above, which we consider an uptrending market structure in this situation. So now let's see how we can understand the liquidity. Let's replay the chart to see clearly, because when you understand one, you can understand many things. So what we have seen that on the 30 minutes time frame, from this support level, there was a strong impulse followed by a deeper correction. Now this deeper correction with this strong drop, we have seen the market again has dropped to the support level and then has gone out for a consolidation, which is basically a strong consolidation pattern with multiple dojis and liquidity grab. Now with that dojis and liquidity grab, what we can see that the market has got a strong bounce to the upside. Now with this bounce, what we have seen, the price after this bounce has moved back to the upside and created an impulse towards the upside. Now after this impulse, as the market managed to break to the upside with a strong impulse, we can expect further liquidity grab. Now let's see how the market has done. If you look at this move, what we can see, the price has broken below this doji, and then after breaking of this doji, the market grabbed that liquidity, and then we can see the market created this strong bullish engulfer. Now this is where we see that liquidity grab, because when the market has broken that doji's low, a lot of buy order which turned to a seller, as their stop loss is a sell order, and when that sell order hit, the buyers has bought that market. Now what we have seen later, the market makes another massive drop. This is the key candles if you look at, guys and girls. Now let's look at also our tool. Now this is one of my best tool that I use to find out the liquidity candle formation. This is also available for you to access if you are our member in Forex Trading Wizard Academy. By the way, you can access that tool directly in the academy. So if you are not, also there is a huge discount going on. There is a $200 worth of coupon to join the academy to the lifetime access. You can find link below this video. I would recommend you to use it. You can use it in the website checkout. So you can use it to join us to become part of this trading community. So now what we have seen, after multiple rejection, finally the price managed to break to the upside with this long massive doji in that area on gold. Now with this doji formation, we have seen the price didn't look back up and it started to move up, created a new higher high in the major direction of the trend. Now you can see this is the power of understanding liquidity. Now when we see this kind of liquidity candle formation, the probability of winning is much higher than when the price doesn't grab the liquidity, is because that smart money trading based on liquidity. Now let's look at another example to clarify you how to identify the liquidity zone as well as the liquidity candle. So let's look at another example on euro dollar. This time we are looking a bit higher time frame on the 4 hour from the swing trading perspective on euro USD. What we have seen, there is an impulse here followed by consolidation, And with this bull flag formation here on Euro USD, what we can see, the market after this bull flag formation has grabbed the liquidity again from the support and has got a bounce towards the upside. Now if we look at our liquidity candle formation, what we can see that there is a doji formation here, a narrow doji. Now that narrow doji has crossed the previous doji's low, grabbed that liquidity, and then has got a bounce towards the upside, which is a very strong, powerful bullish doji. And as you can see, after forming that bullish doji, the market didn't look back, has gone back towards the upside, which is in fact a huge bounce on GJ. And once we see that liquidity candle formation, the price has moved back up to this massive resistance level. Now to understand this kind of liquidity candle, the most important part that you need to look at the trend. Once we see, as you can see, 20 EMA is below, 10 EMA is above. When the trend is up and the liquidity candle formation is towards the upside after a strong pullback, that's where the high probability trade setup comes in place, and one must trade that liquidity candle with proper risk management, which is key. Now if you look at doji, if the stop loss is here, which can give you an incredibly high reward to risk, if you look at even 5-1, which is easily possible to achieve from this trade. Now this is how you can understand liquidity as well as the liquidity candle to trade the market in the major direction of the trend and liquidity. I strongly believe that traders, you have understood this concept as well as have got value in this lesson. If you have got value in this lesson, make sure that you give a thumbs up and also subscribe to the channel if you haven't done yet. In addition, if you want to access all our trading tools as well as the premium strategies available in Forex Trading Wizard Academy, you can find link below this video in the description area with the additional discount coupon available also to use, which is ending very soon. With that in mind, thank you. Now see you soon again, trading live together.